You say A-plus ecosystem execution. So is that going to be enough to get us to when we get a new phone?
Yes, I respectfully disagree with Jim Cramer. I would chase Apple here. We think the value of Apple is its totally unique users and its installed base, plus the lifetime value per user. They hit all-time record highs for every product, and they have 420 million subscriptions, implying they have a bigger installed base than they've ever had. And they now, each person owns 1.6 products, up from 1.5 products a year ago, which lowers churn and increases lifetime value. So I would chase Apple here. It's our one strong buy name, and it's up, as you said, 57% year to date.
Laura, does it mean that they can grow lifetime value per user without necessarily growing units? Do people need the new phone to take advantage of the new services?
So one of the things you see them doing is they're doing trade-in phones. So they're bringing people into the ecosystem of Apple at lower price points because they're selling them used phones or lower price point phones. We like the product expansion because it increases on-ramps into the into the Apple ecosystem. So we don't care if you start with a watch or if you start with a Mac or you start with the iPad Pro. All of those are on-ramp to the ecosystem, and now, on average, 950 million unique users own 1.6 products each.
Wamsi, is your headline as bullish as Laura's?
Yeah, absolutely. I think the takeaways incrementally from the call really were that we've started to see China get a lot better, which was the largest area of concern for people. And I think secondarily, the gross margin guidance is absolutely stunning. You've never seen Apple in recent years guide from June to September quarter anything but a flat range, 37 to 38, moved to 37.5 to 38.5. That just shows you there's tremendous leverage in this model. So I think we're going to head into a period where we're going to see sustained gross profit dollar growth, which we've always said is very highly correlated to the stock, and that has us very bullish heading into what our indicator predicted as better September revenues when we were back on the show last week. And then we're looking at this now going into December with super or easy comps and a services tailwind with significantly large number of new products that are going to hit the services line very soon.
Yeah, I mean, John, I think Carl asked the key question, which is the services and wearables growth that drove the quarter. Is that doable with slowing iPhone shipments?
I think it is if you can sell more services and more wearables to people than they've bought in the past. And I think that's where your Apple Arcade, your Apple TV Plus, your Apple Card come in. If you look at what they're designed to do, they're designed to get people to pay kind of a subscription fee to be in the ecosystem, to be consuming content in the case of TV Plus and Arcade at a degree that they weren't before. And then the card, part of what it does is drive people to spend more inside the Apple ecosystem because they get value there. But I think what was special about this quarter from a financial perspective is it just took square on the things that people were most concerned about with Apple, China specifically. I think what I was convinced of is that pricing was really an issue for Apple in this cycle, even more than people thought. When they were able to, in China, get the VAT taken down, Apple didn't do that. It just sort of happened with the Chinese government. Also, the trade-in program going, also the financing they were doing, essentially all of those things lowering the price of the iPhone. They saw it go from down 22% to down 4%. It was technically positive in mainland China, what Tim Cook said. That is a huge shift quarter to quarter.
I mean, Laura, how do you think about the Chinese market for Apple, the competition, the pricing, and whether the improvement can continue in these numbers?
I thought the important point was they said that the Chinese consumer isn't negatively reacting to U.S. products. I thought that was very positive. And they said that the Chinese government was doing a lot of stimulation of consumers. And so I think they've sort of fixed China near term. And it sounds like trade talks were constructive, as you just reported. So I think China's a positive. The one insight I would add to this conversation that no one's talked about yet is the downside protection you get from Apple. They did $40 billion of free cash flow. They have $100 billion of net cash, which they've said they want to get to zero by buying shares in the open market, which represents downside protection. And they traded a PEG ratio less than 1. So I think this is a great stock here.
Wamsi, we're going to hear a lot more about the credit card really beginning tomorrow. How material is that going to be? Is it going to be another one of these situations where new category, new service, but not enough to move the needle?
Well, I think the credit card is important in that it really strengthens the ecosystem. What Apple is doing over here is making life easy for consumers, whether it be for Apple Pay, whether it be for transit that they're incorporating, and Tim Cook has said that's very important. So there's just more and more reasons to stay within the Apple ecosystem. And I think that is what drives incremental trade-ins from the install base, and that is what also drives incremental switchers coming into the ecosystem. So it's all about strengthening the ecosystem. The financial impact of that in this September quarter is not going to be very material. But as you look into 2020, you're going to have a lot more services, and the contribution from all of those is going to be sustained re-acceleration in services, which we think is very important for the story.
If there's a danger here, guys, and I feel like everybody's so bullish, we got to point out some danger. I think it's the margins going forward, because what Apple is doing with financing, with trade-in, could potentially put down margins a bit. I think we've shown there's a ceiling on how much people are willing to pay, certainly overseas, for iPhones. But what Apple is managing to do, perhaps, is treat the whole iPhone ecosystem as part of the iPhone. So services, we talk about services being separate from the iPhone. They're not really. They're mostly driven by the iPhone, but the margins on those are pretty nice. Also, the margins on wearables, pretty nice. So if they can manage to drive the attach to all those things together, even if the iPhone isn't growing that much, and they can push this trade-in program, which on its own might be a pressure to margins, then the margins stay as rosy as they're projected.